Welcome friends, on this video we will be discussing the importance of understanding the stock market and learning from the strategies of successful investors. As the famous market analyst, Peter Lynch, once said, know what you own and know why you own it. Therefore, we should first understand where and how should we invest. There are different types of analysis that can be used to evaluate stocks. The two main types of analysis are fundamental analysis and technical analysis. Fundamental analysis is a method of evaluating a company's financial health, management, and industry trends to determine its true value and potential for future growth. This type of analysis is used to identify undervalued stocks that have the potential to provide strong returns for investors. When conducting fundamental analysis, investors typically focus on a company's financial statements, such as the balance sheet, income statement, and cash flow statement. These statements provide information on a company's revenue, expenses, assets, liabilities, and cash flow. By analyzing this information, investors can get a better understanding of a company's financial health and its ability to generate profits and cash flow. One can also take help of various websites like T.H.I.N.K and Trendlyany.com for these information. One example of a stock that has strong fundamentals and has rewarded its investors is HDFC Bank. This bank is one of the largest private sector banks in India and has a strong track record of revenue and earnings growth. The company's balance sheet is strong, with a large amount of cash and a low level of debt. Having understood fundamental analysis, we can now move to discussion on technical analysis. Technical analysis is a method of evaluating a stock's past performance and current market conditions to predict its future price movements. This type of analysis is based on the idea that historical data can be used to identify patterns and trends that can be used to make investment decisions. When conducting technical analysis, investors typically use charts and various technical indicators to identify patterns and trends in a stock's price and trading volume. Some common technical indicators include moving averages, relative strength index, RSI, and Bollinger Bands. These indicators can be used to identify trends in a stock's price and trading volume, such as support and resistance levels, and overbought and oversold conditions. Now, as we have understood both the analysis fundamental and technical, let's talk about how Warren Buffett and Rakesh Jhunjhunwala, two of the most successful investors of all time, use these strategies in real life. Warren Buffett is a proponent of fundamental analysis. He looks for undervalued companies with strong fundamentals, such as a consistent track record of earnings and a durable competitive advantage. He once said, "Price is what you pay, value is what you get." Buffett's most famous investments include companies such as Coca-Cola, American Express, and Wells Fargo. He invested in these companies when they were undervalued by the market and held onto his investment for decades, reaping significant returns as the company's stock prices appreciated over time. Rakesh Jhunjhunwala, on the other hand, used a combination of both fundamental and technical analysis. He used to look for undervalued sectors with high growth potential, such as pharmaceuticals and consumer goods. He also closely monitors the charts and market trends to identify the best entry and exit points for his investments. One of his most successful investments was in T.H.I.N.K Company Ltd. It's important to note that these strategies take time and research to implement effectively. And as Warren Buffett said, investing is not a game where the guy with the 160 IQ beats the guy with 130 IQ. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. So in conclusion, there are many different strategies that can be used to analyze stocks. And by learning from the strategies of successful investors like Warren Buffett and Rakesh Jhunjhunwala, we can increase our chances of success in the stock market. Let's end our video by another famous quote of Warren Buffett: "The stock market is a device for transferring money from the impatient to the patient." So invest early, be patient, and create value for you and your children. Thanks for watching and happy investing.